A. Buddy. ETVIX. VIX. /CH. N. Good evening, everyone, and welcome to today's market analysis. Today's market can be best characterized as a risk aversion-driven environment with structural divergence, a high probability assessment. Looking at the closing figures, the VIX Volatility Index, often called the fear gauge, surged a significant 14.17% to 17.16. This move resonated clearly with a broad decline across all three major U.S. equity indices, unequivocally pointing to a collective shift towards a risk-off stance among investors. The Nasdaq Composite fell by 1.55%, closing at 25,873.18, the S&P 500 declined by 0.79% to settle at 7,515.34, and the Dow Jones Industrial Average shed 0.26%, ending the day at 52,498.64. However, the market exhibited severe internal divergence. The energy sector bucked the trend, showing remarkable strength. WTI crude oil prices rose by nearly 5%, while Brent crude surpassed $83 per barrel. This highlights a stark contrast between commodities and technology-related equity assets. We observed a split in capital flows, a portion of funds moved into cash and defensive assets, reflected by the 10-year U.S. Treasury yield climbing to 4.61%. This rise primarily indicated inflation expectations rather than purely defensive buying. Concurrently, another segment of capital poured into commodities and energy to hedge against escalating geopolitical risks. Technology stocks and cryptocurrencies were the primary outflow beneficiaries today, with Bitcoin dropping 3.07% and Ethereum falling 2.58%. These conclusions are strongly supported by the confluence of data from the VIX, major market indices, and WTI crude, lending them high confidence.